Simply put, volume clearly shows the activity and participation of market players, particularly institutional investors. These large financial institutions, such as hedge funds, mutual funds, and pension funds, are responsible for the majority of trading volume in the markets. When they buy or sell in significant quantities, it leaves a distinct footprint on the volume chart. Think of volume as the smart money indicator. While price action can sometimes be influenced by noise or short-term movements, volume is a more reliable measure of the true strength behind market movements. It's like looking beneath the surface of the ocean to see the powerful currents that are driving the waves above. Compared to other technical indicators, volume stands out for its ability to provide a clear and convincing signal of market sentiment. While other technical indicators may sometimes give conflicting or lagging signals, volume is a direct reflection of the actual buying and selling pressure in the market. It's the most pure measure of supply and demand, and it cannot be easily manipulated or distorted. Volume is also a leading indicator, not a lagging indicator, making it highly reliable. We have a saying at MTG that volume never lies. So, how can we interpret volume in the context of institutional activity? When we see a major increase in volume accompanying a price move, it's often a sign that large investors are actively participating in that move. This is what we call smart money volume, and it's a powerful combination of the strength and sustainability of a trend. Now, let's take a look at this daily chart of GLD, which tracks the price of the spot gold commodity. Here, we can see a strong price breakout above resistance after 3 months of sideways consolidation. But what really catches our attention is the volume bars at the bottom of the chart. On the first day of the initial breakout, notice that volume spiked to approximately double the average level. The yellow line you see is a moving average that shows average volume over the past 50 days. Then, after that initial volume spike, notice that volume remained well above average as GLD's price climbed to new highs for 6 more days in a row. This is a classic sign of institutional accumulation, where large investors are actively buying and driving the price higher. After the initial high volume breakout, notice that volume then eased as GLD entered into a brief sideways correction to digest its gains. Then, volume again surged higher after the price broke out to another new high, once again signaling continued institutional accumulation. This basic pattern of higher volume rallies, followed by lower volume pullbacks or consolidation, is the perfect example of a bullish volume pattern confirming a price rally. This simple but extremely powerful pattern is exactly what we look for to confirm potential breakout setups. On the other hand, breakouts not backed by higher volume are often a warning to use caution because the breakout may have a greater chance of failing. Let's put your understanding of institutional activity and volume to the test. Take a look at the chart on your screen. This chart shows the daily prices of CrowdStrike, CRWD, a popular NASDAQ growth tech stock, over the past few months. Your task is to identify areas on the chart where you see significant changes in volume that might indicate institutional activity. Look for areas where the volume bars are significantly taller or shorter than the surrounding bars. Consider whether these volume changes are occurring on up days or down days and what that might suggest about institutional buying or selling. Feel free to use the drawing tools on your TradingView platform to mark the areas you identify. Now, go ahead and pause the video, and once you've completed your analysis, resume the video and we'll discuss your findings together. In this chart, we can see several areas where the volume bars are much taller than the surrounding bars, exploding well above average levels, particularly on the up days. This suggests that institutions may have been accumulating shares during these periods. Also, do you see these large price gaps that occurred on the 2 highest volume days? Those were major news events where the company reported quarterly earnings. In fact, notice that the volume even increased the day before the earnings report. When a company reports strong earnings and revenue growth, it often becomes a prime target of institutional investors and a potential trade setup for the MTG tribe as well. Conversely, there were also a few days when volume increased on a down day, a potential sign of institutional distribution. An occasional day of higher volume selling in a strong uptrend is to be expected, But beware if you start seeing more higher volume down days than up days. By looking at volume, we see where the big players, the smart money, are active. Volume shows us the true amount of energy in the market. It's like looking at the gasoline tank of a car. How much fuel is there? This helps us understand if the market can continue moving or if it may change direction soon. Are you starting to see how tracking this footprint of institutional activity can give you a major edge? It's like having a direct line to the smart money players and can give you reliable signals of potential future price movements. Still, keep in mind that volume analysis is not a standalone indicator. In the Morpheus strategy, we use volume as a confirming tool, alongside other technical indicators and price action patterns. By combining these different elements, we can build a more robust and reliable trading plan that adapts to different market conditions. Imagine you're a detective trying to solve a mystery. You wouldn't rely on just one piece of evidence to crack the case, would you? You'd look for multiple clues that point to the same conclusion. And that's exactly how we approach volume analysis in the MTG strategy. We use volume as one of several key pieces of evidence that helps us build a strong case for a particular trade setup.